Hi everybody, thanks for joining my channel. My name is Yasin Nizami and I make these videos to educate my audience about the global macro, the real estate market in the GTA, some financial information, some investing strategies, as well as a little bit of technology. So if you're interested in any of these topics, consider subscribe and we will discuss a lot in this video with regards to the real estate market in the GTA. So the first thing I'm going to discuss is the stats from CREA for the month of November that came out last week. And again, not surprising because the trend is still downwards. So we can see the sales activity for the month of November, the lowest compared to all the previous years back to 2013. So this is the lowest November in terms of sales activity we have seen since 2013, well below 10-year average. And what we're seeing here, the listing is not an issue anymore, right? You can see that the new listings are slightly lower than 2021, but it's not significant difference. And if you look at the active listing, which are way above the 2021 level and close to the 10-year average. So I think that argument of having no listings, I think we should take this out of the equation. Okay, that's not uh, a significant argument anymore, in my opinion. And if you look at the months of inventory for the month of November, now it's only the month of November data that we are comparing for all the previous years. And what we are seeing here, it is way above 10-year average and way above 2021 levels. So we don't have an inventory issue, at least for the month of November anymore. And if you look at the average price in the GTA area, you can see it has been declining and kind of moving sideways from the month of July all the way to right now. It's kind of stagnant. And the reason is because the sales volume is so low, there are not many buyers, okay? The kind of people who are buying the property right now are the people who would like to live in those properties, whether these are first-time home buyers or people are downgrading or upsizing. They're not investors. So investors are completely out of the picture because obvious reasons. It's 5% interest rate. It's so difficult to produce positive cash flow out of the investment property. So that's the key highlight from the past week. The other thing I want to share with you is um, the stress test from OSFI. There was some speculation that OSFI will perhaps get rid of that stress test requirement because the rates are already too high, and that will push the qualification way above to 7% if someone wants to buy the property right now. They refused that argument and they kept the stress test as it is, unchanged, saying that this is very much needed to keep the system stable. Otherwise, this can become very unsustainable system going forward. So that's another thing. And what we are seeing is the net worth of Canadians has been declining, and we saw a sharpest drop in the Canadian net worth since 2008. And the reason is much of the Canadians' net worth is tied with their home, right? If the home price drops nationally at 11%, and in some areas up to 20-25%, and if you adjust that with inflation, you know reduce further 7% inflation, then your net worth is significantly declined, right? So, and when you add this to with the debt to GDP ratio for Canadians from a household perspective, that gives you a very different and bad picture. So right now, the debt to GDP ratio for the Canadians at the household level is 183%. That means for every $1 that they earn, they have $1.83 of debt on them. And with the rising interest rate, the interest cost to service that debt is climbing, and it is becoming so difficult for people having adjustable mortgage, whether this is car loan, mortgages, home line equity, student loan. So all of these debts are going to be very difficult to pay back and service the debt, based upon the higher interest rate. Okay, so that's what we discussed. And the other thing I wanted to share with you is the Canada 5-year bond yield has come down from its peak significantly. We saw it peaked in the month of October. It reached somewhere close to 3.8%. And then since then, it has been declining. And right now, it is trending at 2.9%. Why I'm telling you this, bond yield kind of correlate with the fixed mortgage rate. So right now, the banks haven't reduced the fixed mortgage rate just because the bond yield came down. But if the bond yield stays at that level, then at some point in the next 2 or 3 months, the banks will readjust their 5-year mortgage rates as well, because banks typically tie their fixed mortgage rate with the bond yield, but it has to be stable. We have seen some volatile movements in the bond market, which is why they're not reducing it immediately. But as soon as the bond yield stabilized, then we will see, and if it stays that level, then we will see the fixed mortgage rates will also come down as well at some point. And what we're seeing right now is a lot of people are waiting for that to happen. And if that happens, then they will maybe change their mortgage from variable to fixed for a short term, maybe 2 years, and then see if the variable rates also comes down sometime in 2024, because that's what people are speculating at. But I think my base case is Bank of Canada will not reduce the rate until end of 2023. It may or may not happen, again, because it depends upon the inflation, but the inflation right now is still too high. But one logical explanation is that after this whole seasonal period, once the shopping spree is done, when the temporary jobs are out, then this will further reduce the purchasing power of the Canadians, and then this will bring the inflation down to some level like 4%, 3.5% at some point in February, March timeframe. But again, this is a lagging data, so it will take some time to see that data to be reflected in the CPI readings. But it has to come down before Bank of Canada will do anything with regards to the prime rate. So that's it from me this week. If you have any comments, put your comment down below. Let me know what you think. I'll see you in my next week video.